for today's class, I'm going to try to get through most of Chapter 9. I'm not saying I'm going to get through all of it, but I'm trying to reserve some time for Tuesday to work with your homework or work on your homework or partners if they come in. I'm looking also at the due dates. Right now, the homework is due on Tuesday of next week. I've been thinking of moving that to Wednesday, the 3rd. So it would give you an extra day then to get through it all if you aren't quite ready. And then I'd still keep the test date on a week from today. So with that in mind, also remember, as managerial students, you can take it at home on Thursday. You don't have to come in for the exam. I will be here if you still wish to do so. So keep that in mind. If you have any questions over the weekend, I'll be with email, but I will be in Minneapolis, so I probably might be a little slower in my response. So,
when are you going to open up the test?
What did we do last time? Was it a day before?
I think you opened it on, Friday.
The Friday before?
Yeah, we had like the whole weekend, because I did it over the weekend.
Oh, really? Oh. I suppose, is that appropriate? I can do that, I guess. I'll open it up this Friday.
If I get
I'd like to have the homework done first, but...
It's a lot easier for me. I have 3 kids and schedules and...
Okay, all right. Let's do that then. So I'll open it up the test on Friday if you wish to take it early. Okay? Good question. Guys on the internet, are you okay with that? Okay, excellent, thank you. So for today then, if you wish to follow along, the last budget section that we have to worry about is the cash budget. So we'll be talking quite a bit about that today. That's discussed on page 469. Included with this cash budget is a budget on cash receipts and a budget on cash disbursements. So we'll touch on those couple of problems as well in this section. The last budget on your, I'd like to call it a continuing problem, problem 73, Optima. We will start that cash budget. Because of time, we will not finish it though. But I think once you get the start of it, I think it's pretty much the same for each quarter. So it's not too terrible. But we'll take a look at that as we go through the problems here. So with the cash budget, it's one of our financial budgets. It's probably one of the most important for many companies to watch their cash flow to make sure that they have enough cash available to pay their current liabilities for the most part. The discussion on this, it's like I said, pretty straightforward. You have a beginning balance. We have to predict how much we're going to receive, makes the cash available, and then less disbursements, and then ending balance. So that's the basic structure of a cash budget. So what we're going to start with is this example 10, which is on page 470. There are some problems associated with this in the homework assignments, obviously. But on page 470, a couple of terms that we have to be familiar with when we're doing a cash receipts budget is, first off, we have to look for any type of cash sale. Cash sales are received immediately, obviously. The other, obviously, choice is credit sales. And we are then basically have a credit policy, which is how much do we pay and how quickly do our customers pay once we give them credit. So in this particular instance, 25% of this company's sales are in cash, so those we receive immediately. Therefore, that means 75% are on credit. And of that 75, 90% is received in the month or quarter, and the remaining 10% of that 75 is received in the next quarter. So it gives you an idea as to how quickly you're going to get your cash from your credit sales. And when I was working for a small company, this was one of my main jobs, is to predict when we would get our cash collected. So very common here. So the examples, I believe, are well done, well written. We obviously have a balance from last month or last quarter in the accounts receivable. This amount represents the 10% that was not collected on our credit sales from the prior quarter. We will collect that in this current quarter, and after we show the cash sales, this is the 25%. I know it's kind of small, but it's in your textbook. But here's the 10% that we're collecting from the previous quarter, and the 90% of the 75% total sales, which are credit, are received in the month of the quarter. So that's kind of the layout of this particular cash receipts budget. And you can see that 75% of, and then 90% computation on the bottom here, showing that 90 and 10%. Obviously, the sum of these two is the total credit sales now for the first quarter. 90 being collected in the quarter, 10% being collected in the following quarter.
So then for quarter two, the 750 is the 10%, the 810 is the 90%,
90%.
and then the 900 is the 10% for next quarter.
Exactly, Allison. Yep. That's exactly how it works. Correct. Very good. All right, let's do a quick example of this. Exercise 58. And we'll probably only do one of these. And there are some test questions on cash collection. So this would be a good example then to use as you go through your examples in test questions. In this particular case, Bennett Incorporated found that 15% of its sales during the month were for cash. Which therefore means that 85% must be credit sales. So if you turn the page to 506 then, at that point it shows us, well, of that 85%, 25 is collected in the month. %, collected in the first month following the sale, which is pretty common. I mean, we usually give 30 days terms, so most of our collections would be in the month following. And then 5% of our credit sales, remember, these are all rolled up into the 85%, 5% in the second month following the sale. And if you add 25, 68, and 5, that only gives us 98%. So roughly 2% we'll never collect, considered bad debt. So the problem is laid out where they'll give us the total sales. For April, 250, for May, 90, for June, 280, and so forth. Round all amounts to the nearest dollar. Calculate credit sales for May, June, July, and August. So starting with May then, May total sales, 290,000. The credit portion is what percent?
For the 25.
85. We'll start with the 85%. Remember, the 15% were for cash sales. So 290 times 85% gives us 246,500. And then we do the same thing for June, July, and August. So 280 for June. Times 85% is credit. $238. July was at 295. $250, $750. And if you want, since we're only doing the cash receipts for July and August, let's right away do the 15% portion, which is cash for July, and 15% of 295 should be 44,250. So the sum of these two then gives us our total sales of 295. Is basically what I did there. And we'll do the same thing for August. August total sales were 300,000. %85 is credit sales. Gives us 255 on credit, of which then would leave us with 45,000, right? The sum of 45 and 255 is 300. So it's not hard, it's just a little time consuming. Any questions? So the actual report then is here. We'll grab those cash sale amounts, 44,250 and 45. Now, for the month of July, we are collecting basically 3 different amounts. In the month, the first month following, and then from 2 months ago are what we're collecting in the month of July. So you almost have to kind of think backwards. So if I'm looking at the month of July, 2 months back would be May, right? 1 month back for July would be June, and obviously I'm in July, that would be July itself. So of the credit sales for the month of May, our credit sales for May is this black number, 246,500 are our credit sales for May. So I'm going to put that in black here also. I'm only collecting what percent? 2 months. The 5, right? So I'm going to multiply that by the 5%. I was going to do that in my head. I don't think I can. $12,325.
Yeah.
Now in August, we're assuming we're not going to collect any more from May, so that would be 0.
Yeah, so then August would be the current, 1 month back is July, and then 2 months back.
Yes, so we're going to have actually 2 lines now, Allison, for the rest of them, until we get to the end, obviously. So for the month of June's credit sales for June were the blue number, 238. So that 238, I'm actually going to do twice. So I'm still looking at the month of July.
So that would be the 68%?
So then, yes. On which one though? Well, they're the same number. 68% would be for June, or July. And then what would we multiply for August? The 25%, right?
Or wouldn't it be 5%?
Oh, 5%, it's 2, yes, sorry, 5%. Good job. The 5% for August. So 68% times our credit sales for June, 238. I've got 161,840. And 5% is how much? Because again, June would be 2 months removed from August. So again, we kind of got to look backwards a little bit here. Finally, we have July, same thing. Going back to July's credit sales were the red number, 257.50. I'm going to put that down twice. So looking at July, we're in the month, right?
5%.
That's where the 25 lands. And July sales once removed for August, right? So then that would be, we're going to multiply by the 68% for the month of August. They do wish to have us round to the nearest dollar, so this would be 62,688. 170, 510 is what I came up with. And then lastly, we go back to one line for the August sales. In August, we had credit sales of 255, the green number, 255. And we're going to multiply it once times the in-month 25%. Obviously, August credit sales would not be any money received in July, so the 25% would just be for August, and that should total, oops, $63,750. So we can add up all of our numbers for July then. $281,103. Then 291, 160, or 291, 160. Am I right on my numbers? That look good? Okay. So that's the process then of budgeting, right? Just what we're trying to do is develop a cash receipts budget using both credit sales and cash sales in combination. Guys at home? Oh, thank you, Michaela. Are there any questions on the cash receipts budget? Okay. Thank you, guys. All right, our next one that we're going to look at is obviously the cash disbursements. This begins on page 471. Very similar to our cash receipts. There's cash expenditures and expenditures on account, right? We're dealing with accounts payable here in this case. The example for this is example 11, and that begins on page 471 as well. And here for this particular example, they buy raw material. 80% are paid in the quarter, 20% are paid in the next quarter, and there were $5,000 from a previous quarter, basically previous year. So here are our purchases, and then the answer key for this is, again, pretty straightforward. Of the 5,000, we're getting 20% in the next quarter. So this is the previous year, 20%, but we pay 80% of the purchases in the quarter and then 20% in the next quarter. So it's actually a little bit easier than the cash receipts projection, so to speak. So all the number computations are underneath. So just realize 80% in the quarter, 20% in the next. The problem I'm using for this is problem 60. So let's try one of the cash disbursements projections. So we're only doing 1 month in this particular case, just the month of August. In letter A on page 506, it says, hey, we purchase raw materials or direct materials on account. So there is no cash portion here. And they pay 20% in month, 80% in next month. Again, that would be logical. Most of our purchases, we would get 30 days to pay it, and therefore most of our payments of that purchase would go in the month following. So if we look at July purchases, because again, we're looking at the month of August for our projection. One month back, right, would be the 80% level. So July's purchases of 77,000. I would pay in the following month 80% of that number, not the 20, 80, and come up with, again, I'm assuming we have to round to the whole dollar, because this really is a projection. I came up with 61,600 as my expenditure projection. We go to the month of August, 73,000. What percent do I multiply this by then? The 20. Current month, the month we're projecting for is August. $14,600. So that's basically A and B's information. Going down to the labor cost, which is letter C now of our problem. Labor. Here we pay 90% during the month, the remainder paid in the next month. So 90 and 10. So if I'm looking at July, what percent are we paying for an August projection?
10%?
The 10, yeah. So on July, we had direct labor cost of 32,300. The month following July is August. So I'm going to be paying 10% of that, or 3,230. And then finally, August, we had direct labor cost of 35,400 times 90%. So I'm paying how much in the month of August?
31,860.
Perfect. And then letter D is our next one, overhead. But with overhead, always be aware of what? There's going to be depreciation. Yep. So we have to subtract that out. So I'm going to take $71,200 minus the depreciation, because depreciation is a non-cash expense, 6,350. Generates in cash expenditure of how much? 64,850. That removal of the depreciation is always going to be there. So not only with the in-class problem that we're doing, but also your project. After that, we have letter E on the next page, page 507. They had taken out a 4-month loan, interest due with principal accrued at 9% per year. The loan and all interests were repaid on August 31st. Use whole numbers to compute interest payment. So I'm just going to put the loan amount. We're paying that back at $15,000 plus interest. So that's going to be a formula. How do I compute the interest? It's always what?
Principal times interest times time.
Correct. Very good, Sandy. So 15,000 times what, Sandy?
Interest.
Interest, 0.09 times time, which is how many months
4,
out of
12.
12 months? You've got it. Perfect. Excellent. It's always rate times time, right? 4 months of interest. And do you have that number, Sandy?
Oh, no. $300.
300?
I got 450.
450? Guys at home, what did you come up with? 450? Okay. 450? All right, sounds good. Thank you, guys. 450 is the interest amount. And then we can add those up. Does anybody have that done already? It looks to be about 180,000 or so, 90. Somebody's got it already. Out at home. 191,590.
Yep.
Is that what you got, Sandy? Okay, thank you, Brianna. 191,590. 191,590. Excellent. Awesome. That's our cash disbursements projection. Any question on this? Okay. Now, the book talks about an excess or deficiency of cash. Obviously, if we have a deficiency here, we have to borrow money. Most companies will have a line of credit for this type of cash flow problem, where timing-wise, right, we don't have the money from our customers to pay our vendors, so we might have to use our line of credit to do so. Or maybe we bought a lot of inventory and we haven't collected the money on the sales yet on that purchase of inventory. So line of credit is the lifeblood of many small companies, and that's almost a requirement in many cases. So anyway, they talk about that borrowing portion and then the repayment, which was what we kind of did already with our last problem, computing the interest expense along with the, obviously, repayment of the note. So, what I'd like to do now is skip the example, which is example 12. I would like to jump to our Optima problem here at this point. So, what I'd like to do is at least get through the first quarter for Optima. And one of the things we got to learn is how quickly do we collect our cash. And if you look at letter B of the Optima problem, now I'm looking at page 513. Page 513. How quickly do we collect our money? What does it say in letter B? Yeah, 85% in the quarter, and then the remaining, or 15%, in the next quarter. And that's kind of nice where you are sure you're not going to have any bad debts, but apparently this company does. For the disbursements then, I'm looking at the raw material disbursements. If you could turn the page and look at letter F. Letter F for the materials payment. What does that say, or how quickly do we pay our vendors? Yes, 50-50, right? 50% in the quarter, and then 50% in the next quarter. Perfect. So I'm just making those notes, and then we'll kind of go from here at this point. So going back to the top then, the numbers we're going to put in this table are in thousands, because if I added the 3 zeros at the end, I couldn't fit the numbers all in here. So I'm going to look first off at current quarter, 85%. 85%, I'm looking at the credit sales now. I had total sales of 65,000 in the first quarter. We sold the units for $400 a piece. That's 26 million. But I'm only collecting 85% in the quarter. So 26 million times 0.85 is 22,100,000. And I'm going to subtract 26 million. Will give me 3,900 is what I'm going to collect in the second quarter. That's the 15%. So let's review. In the first quarter, my total sales from Schedule 1 is 26 million, right? Schedule 1 of that first quarter sales, 26 million.
Question.
Yes?
It's on 513, right? The 26 million that you're getting? Huh, that's where you're getting it from. Okay.
Schedule 1 I'm getting it from.
Yeah.
That make sense?
Yes.
My total sales are all on credit. There are no cash sales here in this particular case. This will give me the 22,100,000, and then in the next quarter, I collect the rest of it. 3.9 million. That's my collection process. Okay, I'm going back to my cash budget. We have prior quarter. This here I'm going to get from the balance sheet. Looking on page 514, what number do I grab from the balance sheet? I'm looking at cash receipts. What number do I grab? Any items?
Accounts receivable.
Accounts receivable, Sandy, how much was it?
3,300,000.
Yeah, 3,300,000. So 3,300, right? If I drop the 3 zeros, is what I'm collecting from my receivables. Think about it. The receivable is uncollected sales, right? That 3,300,000 is the 15% that I didn't collect. So I'm getting that now in the first quarter of the new year. Perfect. So now at this point there is a cash available total or subtotal. So I'm going to take my 250, which was my cash at the beginning, again from the balance sheet. That's our cash reserve at this point. And I'm going to add the 22,100 and the 3,300 to get a total of 25,650,000. So this is what you'll have to do for your project as well. Is have a similar template for your cash budget. So that, again, it reflects, if you want a sample, you can go out to Cengage, the See Now problem, it will give you that information. Going on for the purchases now, I want you to go to Schedule 3. Schedule 3 of the optimal problem. It looks like this. Material purchases budget. How much did we spend in the first quarter? We spent this 18 million, right? And we're going to pay 50% of that 18 million in the quarter, and we're going to pay 50% in the next quarter. Makes sense. So 50% in the quarter, 50% in the next. So 50% of 18,648,000 is 9,324,000, right?
Yeah.
And then 9,324,000 in the next. So those are the numbers I'm going to put into my report, in my cash budget report. So here I go, back to the cash budget. It was 3,924, right?
9,324.
93?
9,324.
In the quarter, into the next quarter as well. I've got to go to the balance sheet again for this amount. But what account do I look at for the disbursement for purchases? On the balance sheet, page 514. Excellent, Brianna. Yes, accounts payable. So 7,248,000. Does everybody see that number? 7,248,000 is the vendor purchases that are paid this quarter from last quarter. So those are the only really kind of tricky ones, getting the cash receipts and getting the cash disbursements for those that are on account. The rest now I can take from the schedules. Labor's coming from our schedule. Oh, Carla, yes.
It's the whole 7 million, or is it the half?
Think about payables. It would be the whole thing because that is half already.
Oh, okay.
So in reality, last quarter, fourth quarter, we had 14,496,000. And this is the half that we didn't quite get paid. So that's what we're paying now. Good question, though. Labor, first quarter was Schedule 4, 3.9 million. So that's what I'm going to put in. So now I'm going to start putting the schedule numbers here. Schedule 4, 3.9 million. Overhead, which is manufacturing overhead, is Schedule 5. Schedule 5, though, remember, for the cash, we have this non-cash expense of 350. So in reality, I need 3.34 million minus 350, which is, gosh, $2,990,000. So Schedule 5, 2,990,000. So these two, we have to subtract depreciation because of its non-cash nature. Selling and admin is Schedule 6. We're almost done here, guys, with this part. Schedule 6 gives us a total of 900,000, and I didn't write down the depreciation, which was 50,000. $50,000 per quarter, so 900 minus 50 is 850. Dividends are recorded or given to us in letter L per quarter. I think it's 300,000. 300,000 dividends paid. And the purchases weren't paid until the fourth quarter, 2 million. So that one we can put way over here. 2 million in the fourth quarter for that equipment purchase. So at this point now, guys, all we should do is add up our expenses, create a subtotal, total cash needs. $24,612. Cash left is $1,038,000. $1,038,000. Am I okay with that number? All right. And obviously the end of the first quarter, the 1,038,000 also appears on the second quarter beginning. So on your project, I would like a cell reference, right? That takes it from the end to the beginning so that we can redo it. This is as far as I'm going to go on the Optima problem. What I'll have done is the completed one and post it in the notes for today's class so that if you wanted to see how it progresses or how it goes further, you'll have that information. Any thoughts or questions at this point? Okay, I'm going to stop my recording. Let's take our first break then, and then come back to discuss flexible budgets coming up. The last section of Chapter 9 is on flexible budgets. And this discussion begins on page 475 and basically wraps up the chapter at page roughly 482. Couple of terms here that we have to be certain we know is what is a flexible budget? And basically it allows us to look at different scenarios, at different activity levels and what our expected costs would be at 10,000 units produced versus 20 versus 30. So that's where they talk about here a range of activity levels. And in addition to that, in order to do a flexible budget, you have to know the behaviors of your expenses or costs. And this is where we delved into quite extensively the behavior fixed and variable in our cost course. We're going to bring that back with this discussion. Also, the author likes to use two different types of flexible budgets. The first one that they talk about is before the fact. And this before the fact is before the year starts. So I'm just in that planning stage, basically. You know, if we're going to go to 20,000 units, do I have the personnel to do it? Do I have the equipment to do it? Do I have the time to do it? That's what the before the fact is about. The second one is after the fact, after the year end. And this is where that control comes in, because I'm going to compare our budget to actual levels of production. So here I'm able to see, well, how did we actually do expense-wise to our budget? That's the after the fact. The author throws in one more term. This after the fact is also known as a performance report. This report is used to judge the manager's performance. How well did they control their costs during the year compared to the budget numbers? So, performance report, after the fact, basically one and the same type of report. So, let's look at the difference between the two. We'll use the two examples in the book that show that difference. Let's start with before the fact. Here's what it looks like. This is example 13. Also notice how it's laid out. We have our variable section and we have our fixed section. And also notice it's the activity level there's multiple levels. So we're just trying to do a what-if analysis here. If we produce 1,000, this is what our costs should be. If we produce 1,200, this is what our costs should be. Also notice that our fixed costs do what? Remain constant, right? And that's the definition of fixed cost. Remain constant in total. And it's also opposite, right, of variable cost. And you'll notice here there is a unit section, and basically we're taking our unit cost and multiplying it by number of units, right? So our total costs change under the variable cost section. And that's the definition of a variable cost. The unit cost is the same, but the total of that cost does change. So that's again a budget report called before the fact, before the year starts. There is no actual comparison, no actual numbers, because the year really hasn't started yet. No actual numbers. The other one is example 14 on page 477. Page 477, 478. This is a after the fact performance report. Also known as a flexible budget, right? But after the fact. Now, at this point, we are flexing our budget to match the activity level that actually occurred. So this is a true comparison, apples to apples comparison as to how well our manager did in this particular case. So now we identify whether the variance, remember we call it a difference variance in cost, is unfavorable, which means we spent more, right? The actual cost is greater than the budgeted cost, makes it unfavorable, and whether the variance is favorable. In other words, the actual cost is less than the budget, makes it favorable. So this is exercise 14 or example 14 in the book. And looking at the numbers, how do you think the manager did? They ended up with a total favorable variance, so it looks pretty good. They did pretty well in this particular case. And that's what this report is used for, is did this manager control the costs that we felt they should be able to control? So that's what we end the chapter with. So let's take a look at one of these after the fact performance reports flexed to actual activity level. So let's look at exercise 64, page 508. This is an actual, obviously it's not the test question, but you will encounter this problem on the test. So let's see what we can come up with here. It really does give students some difficulty. All right, for the actual numbers, they are provided for us. For maintenance, 107,000. Power is 41,200. Indirect labor is 336,000. And then finally rent at 35. All right, the budget numbers are provided for us in the table above. On the top of the problem on page 508, they have the basic cost formula for each of these four items. So if you look at maintenance at the top of page 508, what is the cost formula? Yes. So I'm going to put that here, 86,000 plus what?
The 20 cents an hour?
The 20 cents an hour. So obviously the 86,000 is the fixed cost, right? Doesn't change. And the 20 cents per hour is the variable cost portion of that formula. Fixed cost plus variable cost equals total cost. So in the activity level here, in this particular month, we had 93,000 labor hours. We flexed our budget to match the activity level, because this is an after the fact performance report, flexible budget. So I'm going to take the 20 cents, multiply by the 93,000 hours. 18,600. I'm going to add those two together to give me 104,600. in dollars. That's my total cost. What did I actually spend? The 107, right? So the difference is what, Carla? What's the variance? I shouldn't say difference. 2,400. If we have a variance, we have to tell if it's favorable or unfavorable. Which way is it? Unfavorable.
Oh, because they budgeted for a lower number, but they spent more.
Exactly.
Okay.
So here lies the danger. Just what happened with Allison here is that I said Allison. That is it. You are Allison. Okay. For some reason, I thought that was wrong. Sorry. We budgeted for the 104, and we actually spent more. That makes it unfavorable. So it's kind of like golf. The lower the number, the better. Right? All right. Power. How does that look? How do we figure out the budget number for power?
Would it just be the 45 cents times 193?
Yeah, just it's all variable. There is no fixed at all. So taking the 45 cents times 93, 41,850. How did we do on that particular item? The variance is 650. Which direction? Favorable or unfavorable?
Favorable.
This one's favorable, right? I'm under budget, which is good. Perfect. Indirect labor, both fixed salary, right? Probably, and then rate as well.
So the 140 plus 210 times 93?
Correct. I got 335, 300. A variance of 700. Which direction? Olivia? Unfavorable, right? I spent more than I should have. Unfavorable. And then lastly, we have our rent, budgeted 35. Variance is 0. I think C now is looking for NA or something to that effect. It's neither.
It wasn't over and it wasn't under.
It wasn't over, wasn't under, right? It's neither favorable or unfavorable. Obviously, they want totals at the end, so we simply add up our numbers. So see now, we'll do this also. I got 519,200. And I'm hoping I'm doing this right. Can someone verify this for me? 516,750. And it's an overall unfavorable variance, right? Of 2,450. Does that look good? I just simply took the difference here to get the 2,450. But I also could have done what? I could have added these three. The unfavorable come together. 3,100 minus 650 is 2,450. And netted them out that way as well. Guys at home, how does that look? Okay, all right, good. Let me look to my pre-test questions. Okay, let's look at this one. Do you have this at the end of your packet? It's Montgomery. It's not in the set, it's with the other ones. Do you have this one, I hope? Maybe you don't. Oh, shoot. No, you don't have this one. Well, that's okay. The question is, they want just the variance for power. That's the question. What is the variance for power? Power's actual cost is right here. The cost formula for power is right here. The 30 cents is per direct labor hour. Okay? So here's the information. Montgomery normally produces 15,000 units. Each unit takes 3.35 hours to make. However, this year they produced 19,000. Now, the 15,000 not even used. That is used just for the budget. But this is an after the fact budget. So I need to flex. I need to flex with what? Actual units. So the 19,000 actual units, I've got to convert that to hours because my budget rate is per what? Direct labor hour, not per unit. So this is what you'll have to do on the exam, is convert this unit to an hour using the hourly rate per unit, then multiply it by the rate, 0.3 in this case, but don't forget what? To add the fixed cost to it. Because we want to compare, right? We want to compare this actual 2,200 to the budget, and that will give us our variance. That's the goal here. So let's do that. 19,000 units times 0.35 is how many hours? I know you don't have this in your notes.
6650.
6,650 direct labor hours. I'm going to multiply that now by $0.3. Gives me how much in dollars then?
1,995.
Thank you, Allison. And then I'm going to add the 1,500 fixed cost to give me $34.95 is my budget. $34.95.
What problem number is this?
It's not anywhere. It's one I made up.
Okay.
And you don't have the instruction sheet for it either. So it'll be in the notes for the day, Allison,
Okay.
and we'll touch on it again next week. But I kind of wanted to throw what you might see on the test out there for you. Okay? So comparing the two numbers, how does it look? Is my variance favorable or unfavorable? Favorable, right? And the amount it's favorable is the difference. $12.95 is the difference. Again, I'll have this saved in the notes. So for the test, you might have to convert the units to hours. Also be aware which one are you testing for. I only looked at power. I didn't look at maintenance or labor cost, right? And then finally, please don't forget in your cost formula, don't forget the fixed cost. That is part of your cost total, right, for your budget number. A lot of times students just grab the 0.3 times 19,000 and that's for 6650 and then they're done. Don't forget about that fixed cost. Okay, so I would like to end today then with a quick look here as on the project problem. So I'm going to jump to the Cengage. Assignment. And if you guys could, those that are following along, if you could, go to page 509 of your textbook, please. Page 509. And I'm going to make this bigger so those at home can see it too. Please be aware, guys, everyone must complete the Cengage part, each individual person. The Excel project, I only need to see one from your group, right? Only submit one project, but each of you has to complete this. I wanted to mention one thing. If we go down to the cash budget, it's the last one you will have to do. The area I want to concentrate on is this borrowing section. The borrowed section. We're going to have to borrow some money to meet a $50,000 minimum balance is the requirement for your project. We haven't done that yet. So the ending balance for January has to be $50,000. Well, you're going to have to borrow some dollar amount to get it to $50,000. Now, on page 510, the top of the page, it says, any cash borrowed is repaid at the end of the quarter. Now, I mentioned this once, but not everybody was here. Does everybody see that sentence? It's not repaid at the end of the quarter. It's repaid in the next month. You will have sufficient cash reserves to pay it back fully in the next month. So that's why there is a box here to repay that amount of money. So you're going to borrow it in January, we pay it in February. What else do we have to pay when we pay back our loan? Interest. That's the next line. The problem with interest, it's 12%, right?
Yeah.
That 12% is for the year. Just like Sandy did before, remember we have to multiply by time, right? 1 month is the time, not a quarter, obviously. And it's not 2 months, it's just 1 month. So your interest amount should be just 1 month's worth of interest. So we're assuming we're borrowing at the end of January, we're repaying at the end of February. 1 month has elapsed. After that, there is no further borrowing required. You'll be way above the 50,000 minimum cash balance. Now, one more thing, or a couple things yet. For your sales, letter G on page 509. Please read letter G for me. Or just that first sentence. Do we have any credit sales? All sales are for cash. So whatever the sale amount is, guess what? That's what we're getting in the month. It's not that we're getting 85% this month, 15 in the next. Do you know what I mean? Like we did on our example today? All sales are cash. And the same is true on our purchases. All purchases of raw materials or direct materials are also all cash. So it should make it quite a bit easier to complete the cash budget report, because you're not concerned about credit sales or credit purchases and how quickly we pay them back. Except for the power of three, Allison, Brianna, and Sydney, who is not here. You have another cash budget report, which does have credit sales and credit purchases on it. And that basically is the big difference. So you three, or your group, will have an extra cash budget report. Okay? So I will help you, group 3, I'll help you with that process. Okay? You're not going to be left alone. So, let's see, any other stumbling block that I can think of that students have experienced?
So for the interest then, it's just gonna be, the payment times.
The loan amount, the full loan amount, times the 12% times 1 month of time.
1 divided by 12.
And it's got to be a whole dollar amount. There are no cents anywhere on this projection. On any of your schedules, there should be no cents. So I don't want to see 0.00 on every number. Every number will be a whole number. Other than
The ending finished goods inventory.
the cost per unit on the finished goods inventory. Correct, Liz? Yep. The cost per unit will be rounded to 2 places. But that's the only one. Does everybody have that check figure? What should the cost per unit be?
166.06.
166.06, very good, Chris, exactly. So that's what you should see on your finished goods scheduled budget report, 166.06. Keep your partner in the loop. Again, most students will do all the schedules themselves and then communicate with their partner what it looks like. Obviously, my hope is if you do have a question that you and your partner can kind of work it out. But if you can't, or your partner's not responding, I don't want you sitting there either. Let me know, okay? So work together as best that you guys can. Now, next week, Tuesday then, will be basically a work/review day. I've covered everything that's contained in Chapter 9. We can do some practice if you wish to. If you don't want to practice, you can tell me that too, and if you want to just work on your homework, you can do that as well. But that I'll leave up to you when we'll see how you do this weekend. I will open up the exam starting tomorrow for those that wish to work on it over the weekend. I'm counting on you, Scouts. I can't do 3 fingers. Scouts honor that you are doing it yourself. Okay? That's, I think after 2 years of schooling, you should have that flexibility. Okay? So I'm counting on you to be ethical in your test taking. Brianna, Michaela, any other questions? Okay, I'm going to stop my recording. Have a great and be safe this weekend.